Have you ever wondered what makes someone financially literate? What are the signs to look for? These tantalizing inquiries might have flickered through your consciousness as you navigate the complex realm of finance. Financial literacy, as it turns out, extends beyond merely mastering the art of balancing a checkbook. It embodies a profound understanding of the financial world's entire ebb and flow, the maturation of money, the fine intricacies of investment strategies, and the optimal ways to spend it. It's not just about acquiring knowledge, but about effectively applying it. It's an invaluable skill, one that empowers us to direct our financial destiny. It enables us to make wise decisions about the money we've worked hard to earn. Financial literacy isn't exclusive to finance professionals or the wealthy. It's a vital proficiency that everyone can and should acquire. From the esteemed Warren Buffett, known as the Oracle of Omaha, with his flawless investment strategy and unrivaled understanding of stock, to your regular careful spender who has perfected the art of saving and budgeting, financial literacy is a shared characteristic amongst individuals who take control of their financial future. It's a distinctive feature found amongst those who have successfully maneuvered the financial marketplaces, made intelligent investments, and ensured their financial security. As we embark on this captivating journey, we are poised to investigate the 5 fundamental indicators that distinguish the financially literate from the rest. These signs go beyond knowing the basics of finance to understanding its complexities, applying this knowledge in real-world scenarios, and making prudent decisions that pave the way to financial prosperity. We strive to offer you a comprehensive guide, a financial roadmap of sorts, that not only imparts knowledge but also provides you with the tools to become financially literate. It is an illuminating journey that promises deeper into the sphere of financial wisdom, a voyage that will broaden your horizons and inspire a newfound respect for financial literacy. So strap in, dear viewer, and prepare to delve into this financial exploration. Get ready to question your existing knowledge, discover new strategies, and gain insights that could potentially alter your financial trajectory. Stay with us as we uncover the 5 signs you're financially literate. The first sign is the understanding of basic economic principles. This forms the foundation of financial literacy, which is far more than just knowing how to balance a checkbook or understanding your monthly bank statement. It dives deeper into the roots of economics that influence every part of our lives. So, which are these fundamental principles, and how do they shape our financial health? Let's dissect this complex framework by categorizing it into 3 crucial components: supply and demand, inflation, and interest rates. Supply and demand, the lifeblood of any market economy, form the pulse of commerce. They are the unseen forces that dictate the pricing and availability of goods and services. In simple terms, when supply surpasses demand, we witness a price drop as the market adjusts to the surplus. However, when demand exceeds supply, prices escalate, mirroring the scarcity. Grasping this delicate equilibrium is essential for making informed market decisions, be it buying a house or investing in stocks. Next in line is inflation, a notion that is frequently misinterpreted. Inflation refers to the step-by-step escalation in the prices of goods and services over time. It acts like a silent burglar, slowly eroding the purchasing power of money, causing your dollar to depreciate as time passes. Comprehending inflation is crucial for protecting your financial future, as it directly impacts your saving and investment strategies. By understanding how inflation operates, you can plan effectively and ensure your money retains its value. Lastly, we have interest rates. These rates determine the expense of borrowing money, or conversely, the income you can generate by lending money. Fluctuations in interest rates can profoundly influence the economy as a whole, affecting everything from your mortgage payments to your investment returns. Understanding interest rates can guide our decisions about saving, investing, or borrowing. The renowned investor, Warren Buffett, often referred to as the Oracle of Omaha, once astutely remarked, "Risk comes from not knowing what you're doing." This wise counsel is particularly relevant in the financial realm. By understanding and implementing these basic economic principles, you significantly minimize your financial risk. The first sign is the understanding of basic economic principles. It is from this base that you can launch yourself into a future of financial stability and wealth. The second sign is having strong budgeting skills. Budgeting, in essence, is not just about controlling your money, it's also about understanding how to allocate and manage it wisely. It's an art and science combined where you plan your income against your expenses. It's about making certain that every penny you earn is deliberately allocated to a specific purpose or goal and not spent frivolously. It's a skill that allows you to know where your money is going and how it's being used. Let's take a look at a real-world example. Mark Cuban. This entrepreneur and Shark Tank star is a testament to the discipline and effectiveness of budgeting. At one point in time, he once survived on ketchup and mustard sandwiches, spending as little to save up enough money to start his first business. It was a tough journey, yet he persevered, diligently sticking to his strict budget. Today, Mark Cuban is a billionaire, a status he's worked very hard to achieve. He attributes an immense portion of his success his budgeting skills, which allowed him to diligently manage and stretch his resources. He squeezed every cent, making sure it worked for him, eventually investing in his dreams, leading him to his current affluence. However, good budgeting isn't solely about depriving yourself of life's pleasures. Instead, it's decisions that have been thought out and considered carefully. It's about prioritizing your financial goals above instant gratification, ensuring you have enough to cover your needs and safeguard your future. Budgeting is also about understanding and acknowledging the difference between your wants and needs. It involves making choices that align with your long-term financial objectives, not just your immediate desires. It requires discipline and control, the ability to discern and differentiate between a fleeting want and a genuine need. In the end, budgeting is a crucial tool in financial management. It's a formidable skill, one that has the potential to make a significant difference in your financial landscape. It's a skill that can make the difference between living paycheck to paycheck or building wealth for the future. The third sign is knowing how to manage debt. Contrary to popular belief, not all debt is inherently harmful. This is an idea that Robert Kiyosaki, the respected author of the internationally recognized book Rich Dad, Poor Dad, frequently stresses in his work. Kiyosaki explains that there are two types of debt, good debt and bad debt. In his opinion, good debt is the kind that, when used wisely, can generate income and assist in wealth accumulation. For instance, let's look at a mortgage for a rental property. While it's a form of debt initially, it falls under the category of good debt because it's an investment that brings regular returns. The rental income from the property offsets the mortgage, contributing to your financial assets over time and thus turning it into a beneficial debt. On the flip side, bad debt is the type that depletes your financial resources. This includes debt incurred for buying non-essential items that depreciate over time and yield no return on investment. An example of this is credit card debt, particularly when used for lavish spending on luxury items that are not necessities. This type of debt takes money from your pocket, adding no real value in return. Those with financial literacy, however, understand the difference between good and bad debt. They aren't afraid of debt, but they are skilled at managing it effectively. They strategically use good debt as a means to increase their wealth, while diligently avoiding or minimizing bad debt. They realize that managing debt doesn't mean eliminating it entirely, but rather leveraging it wisely to their benefit. They recognize that effective debt management is crucial for their financial stability. Whether it's prioritizing high-interest loans to decrease the total interest paid or refinancing to obtain lower interest rates, they always have a carefully planned strategy. This strategic approach to managing debt, understanding its consequences, and using it to their advantage clearly demonstrates their financial literacy. Knowing how to manage debt wisely is another sign of financial literacy. The fourth sign is having knowledge about investments. It's not just about being familiar with terms like stocks and bonds, but having a deep understanding of the complex factors that shape the financial market. Comparable to an experienced gardener maintaining a diverse range of plants, a person with financial literacy nurtures a broad and varied portfolio. Each investment is like a unique plant species. Some might flourish in specific conditions while others could falter. Comprehending these complex factors is like a gardener knowing which plant requires more sunlight, which one blooms in the shade, and which one needs extra watering. Similarly, a person who is astute in investments realizes that focusing all their resources into one type of investment is akin to planting a single type of crop, risking complete devastation if it doesn't grow successfully. Hence, diversification is a fundamental principle in investment strategy. A prime example of this is Ray Dalio, an undisputed titan in the investment realm. He didn't limit his investments to one field. Instead, he wisely distributed his wealth across a wide range of investment opportunities. He recognized the significance of diversification in decreasing risk while increasing potential profits. Each investment was akin to a seed sown in the extensive financial landscape. And just like a proficient farmer, Dalio tended to his investments, making sure they yielded successful returns. Dalio's profound comprehension of the investment world, his knowledge about the diverse financial tools, the elements that impact them, and how they interact with each other aided him in navigating the often volatile financial markets. His wealth is a testament to the power of investment knowledge. Therefore, if you're proficient with various types of investments, can speak about the potential risks and rewards they bear, and have a plan for diversification, you're demonstrating definite signs of financial literacy. It's crucial to note that investment knowledge isn't just about earning money. It's about protecting what you already have and growing it methodically. It's about making educated choices that fulfill your financial objectives in the long term. Investment knowledge is not just an ability, but a vital instrument for financial growth and stability. Knowledge about investments is an essential sign of financial literacy. The fifth sign is saving regularly. Often we underestimate this concept, but the significance of habitual saving cannot be emphasized enough. We must learn from the industrious squirrel that collects acorns to brace for the tough winter season. In our case, instead of gathering acorns, we're building up a financial buffer, and instead of preparing for a freezing winter, we're getting ready to face unexpected life events and future aspirations. Take, for instance, the perfect real-world example of Elon Musk. Musk is widely recognized as a forward-thinking entrepreneur who has established innovative companies like SpaceX and Tesla. Once Musk said, "I think it's important to have a feedback loop where you're thinking about what you've done and how you could be doing it better." Now let's this viewpoint to saving. For Musk, earning the title of a billionaire was not an overnight affair. It was a long path marked by discipline, detailed planning, and of course, regular savings. His success narrative signifies the potency of savings. On reflecting, the practice of regular saving not only prepares you for potential crises, but goes beyond that. It's akin to laying a path that opens up to the realization of investments, the blossoming of prospects, and the attainment of financial stability. The act of saving being merely an economic practice. It's a lesson in foresight, discipline, and resilience. It's about predicting probable challenges and opportunities and laying the foundation to address them. It's about disciplining oneself to withstand the lure of instant gratification for the sake of long-term security and wealth. It's about showing resilience during life's uncertainties, ensuring that when unplanned situations occur, you are thoroughly prepared to tackle them. When we look at savings from this angle, it's not just about maintaining a bank balance. It's about making sure that our current actions pave the way for our future accomplishments. It's about managing our assets wisely today so that we can reap the rewards tomorrow. Regular savings is a testimony of financial discipline. So, are you financially literate? Do you see these 5 signs in yourself? Let's draw a breath and contemplate the relevance of financial literacy in our day-to-day life. This is an elementary skill that significantly influences our life, directing our decisions and molding our future. Our discussion will revolve around the following points. 1. The importance of a firm grasp of basic economic principles. 2. The significance of budgeting and managing debt. 3. The role of investments and regular savings in shaping financial decisions, starting with the first sign of financial literacy, a solid comprehension of essential economic principles. Being financially literate means understanding the circulation of money, the theory of supply and demand, and the role of diverse economic bodies. This knowledge forms the basis for sound financial decisions that can essentially shape the condition of your financial resources. Secondly, a talent for budgeting. Budgeting revolves around judicious allocation of your resources. It is about achieving equilibrium between your income and expenditure, so you're never blindsided by unforeseen financial obstacles. This skill imparts discipline, responsibility, and the ability to make the most of what you have. Then, a well-defined strategy for managing debt. Regardless of the type of debt, student loans, credit card debt, or a mortgage, knowing how to handle your debts is crucial for a balanced financial life. It helps you avoid the pitfall of spiraling debt and proves your capability to handle financial burdens responsibly. Next, a comprehensive understanding of investments. Investment is about strategic wealth increment. It's knowing where, when, and how to invest for optimal revenue, whether it's stocks, bonds, real estate, or cryptocurrencies. Comprehending the complexities of these investment paths can significantly fortify your financial position. Finally, a dedication to regular savings is a clear sign of financial literacy. Regular savings act as a safety cushion in times of financial downfall. They are your go-to in times of crisis, the cornerstone of your financial stability, and the route to achieving your long-term financial objectives. Each of these 5 signs we've discussed is crucial to your financial journey. Remember, financial literacy is not a destination, but a constant journey. As Warren once said, the more you learn, the more you earn. We urge you to keep learning, keep growing. If you found these insights beneficial, please subscribe and press the notification button. By doing so, you're joining us on an exciting journey where we steer through the turbulent waters of finance together. Remember this quote by Benjamin Franklin: "An investment in knowledge pays the best interest." Let's aim to become financially literate and secure our future.